Good morning, everybody. Good morning. How's everyone doing today? Hope everyone had a nice weekend. And hopefully everybody is starting to find their way. I can't see people's chats. That's odd. All right, I see some people coming in, but for whatever reason, I'm not seeing it where I normally do. One second, let me figure this out. All right. Anthony, Armando, John. All right, everybody's starting to find their way in. Great. Welcome, welcome again. So right out the gate, markets are up strong. Currently in this pound Aussie long trade. And this one's under pressure. Got a stop at 64. And looking like it's going to have a hard time surviving it unless it finds support here and turns up. Pound Aussie has been tough lately. So there's our stop. I've seen these green trades come down, hang in there barely, and then turn up. So let's hope that happens with this one. That one was long from 7992. It's got some nice targets if it could just survive this attempt to get lower. Looking at crude oil. Crude oil's been pretty active this morning. Right out the gate. This is a great case of a stop and reverse. It really works nicely. Got long at 61, I'd say 87. You want to adjust off our line by one tick, okay? But then it comes down with a reversal at 74, right? We'll make our typical 2-tick stop and reverse adjustment. Try to stay long. But then it gets short at 72, and that's nice because the stop was way down here. We're able to cut a nice percentage off of that loss, basically, maybe 45% or so, and then get short for a really great trade, banging through all 4 targets and still trailing down. So this will be a 2 and done session for the 9 a.m. session and still falling. In fact, the stop, if you're in that trade, should now be moved to 61.31. So not bad. And then you could see with the YM, unfortunately, there's really no place to grab this. This all happened right before the market, the start time opened for us at 8:30 Central, right when, the New York market opens at 9:30, but it was already pushing through, and there's nothing we can do except wait. So the YM still waiting for its first session of the morning. And unfortunately, the pound Aussie not able to survive and stopping out this morning for its first trade. And then on unleaded gas, that too had a nice move, but there were no setups that the spotlight was able to catch. So that one as well is still flat and waiting. So that's kind of where we're at the moment. Again, I want to welcome everybody. I see a lot of people starting to pile into the trade room. So welcome, welcome. Nice to see you all. And Leonard, I'm glad you found your way to us. Welcome. YouTube Live's been fun for sure. Few things that are kind of weird, just getting used to. I don't know who's in the room unless you speak out and say hi. So I really appreciate that. Good morning, Miles, Mike. Awesome. I'm also just getting used to the routine, which has just been a little bit weird. Okay, so unleaded gas did just get a long trade. Long at 94.96 and moving fast. Maybe you can catch it on a pullback if you're trading unleaded. If you missed it, wasn't a ton of time to get in there. Maybe a little. Well, you probably had enough, though. Did pull back and hit the entry. Anyway, trying to get to money management at 9533. The YM also got short really fast. And that one, not sure. Let me know if you grabbed it. It seemed like it might have been too fast. Pretty quick market this morning. Of course, crude oil finished, stopping out at 6127. And I mean, we're not interested in that anymore. It's already achieved its trade plan goals. We could wait until 10 for the next mini session on that one. And now you can see unleaded gas has quickly jumped up and hit its first target, 42 ticks, and is now in a risk-free position. So back to the pound Aussie, just been a little bit out of step and out of sync. This trade plan is the original Spotlight Power Trader trade plan, and it does not incorporate trades off of our blue line. This would have been too early anyway. But this is a trade that when markets are trending and you could see a nice action move down, a reaction that goes right up into our blue line, setting up a subsequent action move. That second subsequent action move is often where you will see the strength of a move. And those are the kind of trades you want to take off that blue line. So you can draw the trade or you can turn it on. If you've got the diamond spotlight, you can draw the trade using these techniques I've taught you guys many times over. But that's the trade, and look how accurate the target is. But it's not a trade for us. It's too early for one, and that's a setup that we just don't have in the trade plan. But as you advance and learn more and more about these techniques, you can certainly use them anytime you wish. So you could see the kind of a fast market condition here with the YM quickly getting short, then stopping out. And I'm not sure if anyone was able to grab that. It seemed like it was too fast. Karam Latif, good morning to you. And thank you for your good wishes. I am 100% on board with your sentiments. It's funny because every time I log into the YouTube Live, I always get some sort of error message, which I never really know how to address or fix, and then everything works perfectly. It's so bizarre how you get these random error messages here and there, and why can't things just work, right? It was just too easy. But luckily, these error messages don't seem to have any effect because everything seems to be working fine. All right, so being the YouTuber that I've been accused of becoming, I need to ask you guys to kindly give me a thumbs up and like this session. Helps me motivate to get up when it's still nighttime out and jump on here and be here with you guys. So anything you can do to help will certainly be appreciated, and clicking that thumbs up button is a big help. I really appreciate it if you guys can do that for me. And then engage. Let me know if you have any questions. I'm happy to discuss any of these strategies or techniques, or anything at all is fair game. So just anything you type in, I'll certainly respond to. Richard finally broke the code. Hey, Richard. Yeah, sorry. I have to keep getting into the routine of scheduling in advance so that you guys can see these sessions coming ahead of time. And I'm like, this morning I'm logged in and I'm like, oh, wait a minute, I got to let everyone know we're doing this, because if I don't schedule it, you've got nothing to click on. So I'm getting used to it. It'll be a routine at some point. Yeah, and the 1080p, Anthony, which is funny because that's what I keep getting this error message on, even though it's working perfectly. I think it is. All right, so look at unleaded gas. Unleaded gas starting the week strong. So here's the thing. This is a real important point that a lot of you who have been with me a long time know this already, but some of you who are like just joining and learning for the first time, I get questions, and these are good questions, but I want to explain it, and that is this move down. I mean, our start time's at 9 o'clock. We have a trade here that gets filtered out because of a filter we use, and that's when the 50 crosses over the 200. We don't want to trade against that for X number of bars. 20 bars is the default. I set mine to 8. So you can see it's filtered out. Would have been a successful trade. It would have got to target 1. Anyway, then you get the strong move down. And why didn't we get that? Well, there weren't any setups. Spotlight is picky. It's not trying to catch every move. It's just trying to catch the move where the odds are higher for us. So we will let strong moves go because they don't meet the criteria of the strategy. That's the only answer I have. I mean, that's just the way it is. We're not trying to catch every move. We're trying to catch the move where the odds are strong in our favor, and then we apply that to trade plans that we can test and prove over time. So we wait, and then the next trade comes, and lo and behold, I mean, obviously we're not going to win every trade, but we know the odds are in our favor. And there it is. First trade of the day, first trade of the week. It's going to be one and done. Trying to get to a target 4 right now. Trailing at 9539 is your trailer. And unleaded gas, if it's a market you haven't considered, it's a pretty interesting choice. $4.20 a tick. And it's very explosive. It really moves. It's a good market to trade. Not for the faint of heart, and it does take some practice. You have a little slippage to deal with from time to time, maybe a little spread just because you have the small $4.20 tick. And if you see that it's not a huge, densely traded market. I mean, there's only 19,000 contracts so far. It'll go up. I mean, we've seen it up higher than this, of course, but clearly if you were to compare that to crude oil, 174,000 contracts. The session's still early. And it often moves in the direction of crude, but it is not 100% correlated, and they're different time frames. This is an 8-tick momentum bar. Unleaded gas is a 20-tick momentum bar. And 2 ticks of unleaded gas is still less value than 1 tick of crude oil. So that's also interesting. In other words, you could afford 2 ticks of slippage and you're still paying less than 1 tick of slippage with crude oil. So this is a nice trade, of course, but it's beyond the scope of our trade plan. The trade plan as I said earlier, got long here, and then we had that nice stop and reversal, which I know drives a lot of you guys crazy, but you can't fear it because oftentimes it cuts a losing trade down so that the loss is much less and then gets you on the winning side. So there you go. 2 trades to win this morning's first session at 9 a.m. What else? I'm thinking I'm going to replace this Russell chart. We haven't really paid much attention to it for a while. I don't really have a feel for the Russell these days. As you guys know, I've been kind of just watching it, trying to find a chart that kind of speaks to me. And it's just, I've lost my feel for it ever since I went to the $50 per point. And since COVID, and I'm sure the Russell's good. I just haven't figured it out. So what I think I'll probably do is put another Forex chart up, and I've got a couple contenders that I'm thinking of that are interesting, that I'm interested in, that I think you guys might be interested in too. So I know that this real estate here on this monitor that I'm broadcasting it's pretty valuable, and I want to use it wisely. I'm probably going to replace this 5-tick momentum bar with crude also, because that's a chart that we just don't really use much anymore. It's just too fast, and the trades just aren't large enough to excite me. And now that we've seen the 8-tick work so well for so long, I'm thinking that these 2 charts up here are going to find themselves relegated to the dustbin, or at least just reduced down and put in the dark for a while. There's a short trade on the YM, so if anyone has not yet, if you couldn't take advantage of that first trade, which probably went too fast, as I said, here's another, well, here's a long trade off the blue line. So, yeah, the short trade actually just canceled. The blue line is not the traditional trade plan. It's that optional trade off the 20 SMA. It's usually not the best trade to take late in a trend. We don't know if this is late in a trend. That's the problem. 31,436 is the entry, and the stop at 31,402. Maybe you want to put that down to 31,399. It's a 3-tick adjustment, but it's a key level at 31,400. So it may or may not help. 3 more ticks. Try to protect the position, but this is a Johnny-come-lately trade, I think, because you could tell by the upward movement, not a lot of energy after a strong burst upwards. It's like it just kind of drifting up and up. It looks toppy, like that's a pretty long consolidation. If it finds support here, it could push higher. I mean, you can't really second guess. If you're using the blue trade, then you're using the blue trade. Unless you have some other criteria that you're using it on a clear pullback. So now you got to stop and reverse, and that's at 07. Adjusting it down 2 more ticks, and it got to 09. So, tough one. Maybe it survives. If you're in the blue trade, you go to 07. If you're not in the blue trade, you're probably short already at 09, or you should be. It's targeting 378 at target 1, 362 at target 2, and the stop is at 446. So it did get short, for sure, as you can see. And it's got to work through that 50 moving average. Money management to get to risk-free is 31,381. I got to turn these alarms off on these horizontal lines because every time I put one on, I get a text message. All right, let's see if it can get there. If you're in that trade, let me know. The YM works really well. It's a good market to be trading. If you want to trade an E-mini, that might be one of your best choices at this point. It's pretty steady. Karoom, why don't we make use of fast moves of market right after market opens? I was thinking maybe we can make little money with making orders for small number of ticks. Yeah, I mean, it's not a bad thought, but here's the thing. There's a specific philosophy that I personally follow, and that I try to kind of convey to everyone else, and that is that we don't just shoot from the hip. We want to make trades with a system that we can test, get measurable results, and prove that we can make money with it. So with your idea, which is not a bad idea, but I would still want to see you go through that same routine, is you might have to learn that in live time going forward and practice it each day, develop some rules to follow, and then prove you can make money with it. And don't just start throwing real money at it until you do that. I'm a big believer in proving it first. So while that's a nice idea, I have some very specific strategies and trade plans. So I'm not exactly sure how to respond beyond that, but feel free to follow up with any comments or questions. Good morning to you, Alan. So the YM unable to get through that 50 moving average, and it may not be done testing these swing highs up here. Market definitely up 500 points, 1.6%, and this may be a trend day up. Let's see if it makes a new swing high. By the way, happy March. I'm so happy to be out of February. On my end, it means that we're entering into springtime and the cold weather is behind us for the most part. I mean, it's still nippy, but I'm not like seeing my breath now in my office. But it also means that we're going to be rolling over the E-minis to the June contract, and everyone needs to be aware of that. Currency futures as well. Some others like the DAX, although that'll be a little later in the month. DAX futures. But the E-minis in particular, we're going to go to the M21 contract, June. And that's going to happen on the second Friday, March 12th. So March 11th will be your last day in the H contract. And by the 12th, you want to make sure you have rolled over your charts to June. So heads up on that. Mark your calendars in case you forget. Michael, you got snow last night? Yeah, I mean, look what happened in Texas. Clearly, it's not the case for everybody. But for me on the West Coast, I mean, I got cherry blossoms already on my trees in February, although that's been kind of common the last several years. I'll never forget the first time I saw that. I'm like, wow, it's a little bit early for the cherry trees to be blossoming. It sure is beautiful with all the pink flowers everywhere up and down the street in the backyard and everything. Although it does make a mess all over the cars, but it's still a lovely sight. But the thing is, middle of February, it's like not a very long winter. And now it just seems like that's the normal thing. I mean, it's been doing that now for at least 8 years. And Karoom, thanks for your advice. Yeah, you're welcome. Happy March in London. Amazing weather. I miss me some London, Karoom. I love London. I will be there again, hopefully this year. Definitely strange. Oh, you got strange weather, 79 and snow flurries. Yeah, John, what's going on? I heard that, whether you believe in global warming or not, we don't get into political discussions here, but the Arctic vortex, all that frozen cold air was pushed south. So I don't know if that has anything to do with it, but All right, so the YM, unfortunately, making a new high here and stopping out. So tough start this morning with the YM. I just got done telling you what a great market it is. And a new long in the pound Aussie, that was at 7953. Doing nothing but trending down, but this is the next trade. It's targeting 68, 76, 85, and 93. I'll be right back. All right, just had to make sure I got that trade placed. Getting close to our 10 a.m. mini session, which means you need to be on your toes for crude oil. The short, a little bit early, but it could be one we get in sync with at 6154. Got about another minute and 10 seconds. And then if you can grab that entry, that would count. It would cancel if it comes down and hits its money management level or stops out. But if you have a chance to grab the entry, wait till the 10 a.m. time. Still got another minute to go. And a lot could happen in a minute, but that trade would count then. So we shall see. Michael in Minnesota, I imagine it's probably pretty chilly up there still, was my guess, yeah? All right, so getting close to triggering into this trade here, but we're still waiting. Another few seconds. It looks like it's going to trigger in. Hasn't yet. But now it would be a live trade if it comes down and hits 54. First trade, there it is. So the 10 a.m. mini session has just started. The money management level will be 61.42. Remember, target 1 is your primary objective with the 8-tick momentum bar. Additional positions, you can go to further targets. The trade plan hits its goals at target 1 and trying to get to money management at 42 and getting as low as 43. So missing by 1 tick. So hopefully it pushes lower here. Getting to risk-free where you can move your stop to break even is always a nice feeling and a nice position to be in. The YM also getting short again, trying to go down. This might be a strong trend day up in which short trades are just going to fail. Every now and then that happens. Usually you're going to have a range that you trade within, but sometimes you just get a day that goes up, up, up all day. And let's face it, a counter trend trade in the face of a strong trend is just not going to succeed. So this trade here, the stop is at 71, and it just stopped out. So not really able to take advantage of the trend, and the counter trend trades failing so far. And just a little bit of bad luck getting out of sync with the first strong move because it just happened a little bit too soon. So yeah, I would be careful on the YM with, although the at some point the reversal is going to be the best trade. It's just that when. As you can see, this trend is up, and there doesn't seem to be any indication of it wanting to go down. Meanwhile, crude oil, again, trying to push through, missing its money management level by 1 tick. We got to see it. There it is. All right, so move your stop to break even, and there's your target 1. So 14 cents. $140 a contract in the bag. If you're in that trade, you're one and done. Now manage any additional positions. Target 2 is next at 61.31 for 23 cents. Remember, every penny is $10 a contract. And the stop should be at 53. So it's hiding above the 50-cent level, which is good. And so far, so good with crude oil this morning. The E-minis, obviously, the YM anyway, a little more problematic. And unleaded has just been on fire, too. Unleaded with another winner. But look what it did. You're already one and done. And again, and this is for your sake, Karam. Karam. I hope I'm saying your name right. Sorry, I see that I probably didn't. Karam. Anyway, trade plan. With something like this, you can test your rules. Look at like 100 sessions. And we call that fast testing. And you should be able to quit positive somewhere in the high 70% range. With when you add break-even sessions, you should be up over 80% and then less than 20% losing sessions. And so like this, you have a profitable business that you can grow your account. And you don't need to keep trading. You just stick with the plan that delivers those kind of results for you. And so there are techniques we do to assure that, to test that and prove that to ourselves, and then practice before risking our money. So if you were to take that concept and apply it to your idea, all of a sudden your idea takes on a whole new context. It doesn't mean it's not doable, but it would be challenging. Still, though, it's your idea, so it's probably worth pursuing. And now the stop on unleaded, if anyone's in that trade, 9546. And crude oil did stop out. So crude oil's finished, also stopping out at 46. Funny how that works. And you could see that the pound Aussie is just having a hard time getting through that 20 SMA. The 20 SMA is a pullback area. Often you get the action move, you get a reaction up into that 20 SMA, which often sets up another action move. So while we have a strong trend move up in the U.S. stock market, the pound Aussie seems to be in a strong trend down. And we'll see if it could hold at these levels and at least get high enough to get us a target. So a tough go at it. It won't be the first time this has happened with a winning trade plan. A lot of you have heard my story years ago when I first started. We had a really nice trade plan for the Russell E-mini, and then all of a sudden we just took loss after loss. 16 losses in a row, and the 16th loss was on a Monday. So you can imagine how shell-shocked everyone was after 15 losses in a row to show up the next day on a Monday and the first trade out the gate, another loss. Well, I could tell you right there that half the room disappeared, never to be heard from again, I'm sure. And then the next trade, which was the 17th trade, the first trade after a 16-trade losing streak, broke the losing streak. It was a winner. The second trade on that Monday. And you might think I have a really good memory because that was like 18 years ago. My memory is not that good, but I do remember that because that 17th trade was the first trade of a 20 trade winning streak and all new equity highs. And I don't expect anyone to be able to survive trading through a 16 trade losing streak, especially if you're over leveraging or your capital is low and maybe you're trading a market you don't belong in. I mean, there's a lot of factors actually, but in those days it was $100 a point. That's when it was the ER2. You guys remember when the Russell was the ER2? Anyway, those that stuck with it were very happy finally. And a big lesson to be learned. Trading's risky. Even the best trade plans will have a hard moment in time that could last for what seems like eternity, especially when you're the one experiencing it. But that's all it is. It's a moment in time. The winningest trade plans will have losing streaks. A 90% winning trade plan, let me know if you find one. Most people think they have one, and then they realize, well, it was just that brief sample that they were looking at. But the point is that a 90% winning plan at some point is going to lose 10 in a row or more. It's just going to happen. So does that mean that the trade plan's crap and no good? Most people throw the baby out with the bathwater and they get rid of that 90% winner, even though it had the 10 losers in a row. What they don't realize is that the best trades are going to come after. And it's going to resume and recover and keep on going in the right direction. And that's the power of the trade plan. And that Karam is kind of coming full circle, just to make my point back to your idea. Yeah, John, had a little tongue twister there. I don't remember what it was now, but at the moment I'm like, oh, that's a good tongue twister. So the YM is short again. And the pound Aussie, it doesn't look like it wants to go up, at least at this point in time. $79.32 is a stop, and it missed by half a pip. And there it is. So it stopped out again. Not the best start to the week, but hopefully we get this few losses out of the way and the winners will come pouring back. All right, so unless anyone has any more questions, I think I'll silence the mic for a minute and I'll check back with you shortly. All right, guys, I'm back. Sorry about the delay. Hi, Willie. All right, Karam. Light on moving with regards to moving. Are you talking about moving averages and entries? I think is what you mean. So we use them. I mean, the Spotlight Power Trader uses them for sure, but we use them in a unique way. You can see the different colored trades. So let's discuss the one that I've been talking about, the dark blue trade here, and the way this one works. And I'm not sure if I explained it quite the same way in the book, my book, but I am working on a second book that kind of gets into this in greater detail. But basically, we identify where either the buyers or sellers become exhausted. And I use these 3 dots as an indicator that tell me if it's below the market, the sellers get tired, and if it's above the market, the buyers get tired. There's different degrees of exhaustion, but one of the things I've learned over the years is when these exhaustion points occur close to one of our lines, in this case moving average, that we can create a setup. But the whole idea is to stack the right pieces of information on your side and get price action confirmation so that you know the odds are in your favor. And then you apply that to trade planning. So moving averages are valuable, but they can hurt you too. I mean, you have to understand the strengths and weaknesses. For one thing, they are a lagging indicator because it's measuring what happened in the past. I use them specifically to identify near-term support and resistance levels, and that becomes highly effective when you team it up with the exhaustion concept. Sellers become tired right on or near the line, and then the price action pushes up above our balance line, the balance line marking the balance of power between buyers and sellers. So you've got exhaustion, you've got price action moving up, closing higher. It's a little tricky if you're not used to the colors with Spotlight, but because it was in the short trade. And again, we were talking about how this is a strong trend day so far and the reversals are failing. Another failed reversal, 3 in a row. Finally, a long trade. But the long trades are also kind of coming late. Like the strategy is out of sync with the session so far. But just to illustrate this setup here, I know that the dark red is closing higher. Okay, if we turned off the Spotlight colors, these would be green bars. Spotlight turns green when you're long, it's red when you're short, and it's gray when you're flat. But when you're in a trade, the bright color goes in the direction of the trade and the dark color goes in the opposite direction. So currently in this losing short trade, you got the 3 dark reds. Those are all up bars, okay? So just imagine up bars on the high side, the long side of our balance of power line. I like to think of that as the great crocodile pit because that marks the line between, the tug of war between buyers and sellers. So you got exhaustion, bouncing off the moving average, price pushing higher, and then rules that we use. So not only does the price push higher, but then the entry lands on an up bar on the long side of the balance line. The first up bar that is either on the 3rd dot or up to 4 bars to the right, whichever comes first. Well, in this case, it happened on the 3rd dot. So that's your setup bar. Then our entry is a couple ticks above that. So the price still has to push a little further. And a lot of times it won't, and it'll go the other way, and it'll cancel, and you'll end up with a trade that you avoid, which is a good thing. So right now, you can see it did push higher, and this is a long trade. But that's the concept. So that's one way to use a moving average. It's not the only way. There are many ways, but this is an effective way. This is, it started out, what I just explained to you started out as a setup on the 50 moving average, the yellow trade we call it. I don't have any examples of that. I can maybe find one, but the blue trade is basically the same setup, but on a 20 SMA. And what I like about the 20 SMA, as I said earlier, it's a good pullback zone. It marks where, after a strong action move, you get a reaction that often will terminate or end around that blue line, the 20 SMA, and the immediate past can predict the immediate future with a high degree of accuracy. So that concept gives you a subsequent action move, and those are tradable. Right? So you have action, reaction, subsequent action. And I'm sure you read about that in my book. So that's a concept that we're constantly on the lookout for, talking about, and my strategies try to take advantage of that every chance they can. And feel free to follow up with any other questions. I'm not sure if I addressed your question specifically as you intended it when you asked it, but follow up if you need to. Anyway, back to our first trade of the morning for the 10 a.m. mini session on crude oil. And this is not a moving average trade, by the way, Karam. This has to do with the market being overbought and a reversal trade. And you can see how accurate target 2 was before it then reversed again, and how accurate target 4 was. So these trades are all being measured at the right edge of the chart in real time and adjusting to market conditions. So when you get it right, you really get it right. I mean, you got coming up target 3, look how perfect that was. Target 2, perfect. You want it to overshoot a tiny bit. And then target 4, again, all pre-measured, and each one is a different size based on the condition of the market. And so I use the same concept. Now here's the yellow trade that I talked about. There's a couple of them here. And notice that the exhaustion dots are close to the yellow line. That's a 50 exponential moving average. The blue line is a simple moving average. It's different. 20 SMA and a 50 EMA. But it's the same concept. Look at this one here, which was the trade that stopped and reversed into the winner. You have your exhaustion dots within the proximity of the 50 moving average per the rules of the plan. You have the down bar, the first one on the 3 dot or up to 4, on the third dot or up to 4 bars to the right. It was on the third dot, and it closed below the balance line. Remember, the light color goes in the direction of the trade, so dark green closes down, gets short, and that's how the spotlight uses moving averages with these setups. There are other ways it uses moving averages. There are other setups that are not being used with this trade plan that the strategy can do, and they're really useful. Maybe I'll get into those. I don't know if we'll have time to do that today, but if you ask me about the other setups and the other ways of using the moving average, I'd be happy to get into it on a subsequent session. Yeah, and that, Karam, it's just, you know what? The role of moving averages is vast and wide. There are many ways to use it. A lot of ways are tried and true, and other ways are tried and failed, and some ways are a mix in the middle. The way I'm doing it is kind of unique. It's novel. It hasn't really been done quite the same way, I don't think. Lining up the pieces of information like I explained, from exhaustion to balance line to price action confirmation, and then measuring trades that tune themselves. All that stuff is kind of novel and unique to the Spotlight Master Suite. Again, it's not the only way, but it's a way that works. And also it gives you tools that you can do what I said to you earlier. And that's being able to prove your assumptions, prove your plan before risking real money. Prove it. That way, when you hit losing streaks, you'll still be able to stay in the saddle and run your trading plan. Because what you learn when you prove a trading plan is how to live with the good, the bad, the ugly, and the great. And despite the ugly, like we've been witnessing with the pound Aussie this last week and a half or so, for sure, you realize that despite the ugly, the equity curve ends up going up anyway, because the great will come back. But when you're using moving averages, you want to, the point being that what I just explained to you gives you tools that make it easy to test. You could see the trades, you've got the rules to follow. You could put it on any chart and look at a lot of sessions, and through some of the fast testing techniques that we talk about, the 3-step sniff test, etc., you can learn how to identify a chart that will fit your needs, that you can trade, that you can practice, that you can prove, and stack the odds so far in your favor that your chances of success are as high as they could possibly be. And that's all one can hope for as a trader, in my opinion. All right, guys, let me just remind you again, please hit the like button. I really appreciate you being here. I love spending time with you. This has been a real fun experience so far with YouTube Live. I do want to announce that I'm going to do some impromptu sessions. I've got some ideas. And speaking of fast testing, I think I'm going to do a series of fast testing sessions. And in fact, why don't you guys type in and let me know what you think of this idea? Because I've been contemplating it, and I think I'm going to do it. I don't know when, and if I do, it might be spur of the moment, so you'll have to get notified so you can jump in. But what I think I'm going to do is do a fast test session. I'm going to go through as if I'm fast testing on my own in my workspace, and just let you guys kind of sit in and watch and learn how I do it. And then, of course, if there's questions or whatever. So I think I'm going to do that. I think I'm going to do that live. And I think it'll be fun, too. And hopefully something that you guys can learn some techniques. We're all different. We all have different needs and different life situations. There's a trading strategy and plan for you somewhere. It may not be easy to find, but it's worth finding if you can. A winning trade plan doesn't grow on trees. It's not easy. But I use techniques that work. I mean, not 100%, but they work enough to whereas identify trade plans that tend to stand up. Some fail, but a lot of them work. And so I'll show you how I do it, and I'm getting ready to test some stuff, and I think this will be helpful for you guys. So what I'll do is I'll try to schedule it if I can. Otherwise, I might just go, I got some free time. I might just hit the record button. And then hopefully you guys push the notification. You subscribe to the channel. You push the little bell. You get notified. You'll see when I'm live. And you could always watch the replay. And I'll do it more than once anyway. But that's my idea. So if you guys like it, let me know. Other than that, unless there aren't any more questions, we've been at this for about an hour. I think I'm going to let you guys go for the day. Don't forget, one announcement is that tomorrow we're dark. Normally we're in here on Tuesdays, but tomorrow we will not be in here. John is traveling, and he'll be back hopefully by Thursday, but tomorrow, no trade room. But don't forget Wednesday, I'll be in Wednesday, and then we'll also do a separate side session for the crude oil inventory report. AMF. Well, I know the first thing that popped in my mind from that, Richard, but it doesn't pass the content for children law or rule. All right, guys. Thank you so much for joining. Hope to see you again on the next session. Have a good day.